So what's up guys, welcome back to a new series where I will go and make a trade breakdown every single Saturday and show you guys the trades that I take. So for the guys that don't know me yet, I'm Oscar Masson. I'm a funded trader as well as a trading coach inside the Trading Academy. And with this series or this YouTube channel, I'm trying to help you guys become a funded trader as well. So without further ado, let's get into the trade breakdowns. So in this video, I'm going to do a trade breakdown on GBP AUD. So we're going to go over structure, premium versus discount, supply and demand, liquidity, order flow, strong highs and lows, and of course fractal breaks. So let's begin with structure. If you just take a look at the chart here, what can we see? Well, on the daily time frame, we're clearly bullish. If we go over to the 4-hour, what can we see? For me, it's the same swing structure all the way over here. So we are still bullish. Why don't I have these as my swing highs? Well, because in my opinion, if we look at the internal structure that we have, this is all just internal move to the upside. So I just see this all as internal structure, and the real swing is for me this swing. Okay, so going over to the 1-hour here, you will also see that my swing structure here is also bullish. So we are bullish on the daily, 4-hour and 1-hour. So now that we looked at structure, we're also going to take a look at premium versus discount. Let's go. As you can see, we were swing bullish, and after the move up, we got a pullback in towards the 50% levels almost. So still good enough to see a possible upside move. Yeah, we're close enough to that 50% level. What we most of the time want to see is a move under the 50% level before moving up higher. But we must know that the 50% level is not just a line, it kind of is a zone. So we came close to the zone and we saw a confirmation on a lower time frame. That's why it was still valid to take or go along, in my opinion. Going over to the 4-hour, as we know, I had the same swing on the 4-hour as on the daily, so my premium versus discount is going to be the same. My explanation on it is also going to be the same. So quickly going over to the 1-hour, what are we going to see? Well, that we are 1-hour bullish over here. So if we take our premium versus discount tool from this low in towards the swing high over here, of course, now what we will see is that we had to move up, and then we quickly then came down in towards the discount prices, and anywhere in discount prices, what can we do? We can buy to the premium prices. So it aligns perfectly. With premium versus discount, it's done now. Now we can start and look at supply and demand, which is number 3, S and D. So let's begin by looking at supply and demand, and let's see how we used it. So back again on daily, what can we see? Well, of course, that after that we are bullish, we're around the 50% level, which is a zone like we told you, and we see that we tapped in towards this demand zone on the daily, so we could expect a move up higher as well. So on the daily we have demand, so we can also check that also off from our checklist. Going over to the 4-hour, it's kind of the same. We are bullish, and again around those 50% levels. And over here, what do we see? Well, we are inside for our demand. So from this demand, we could expect more upside. Okay, let me remove this real quick. So this demand, we are expecting to push price a little bit up higher. Talking about supply though, and we're going to go over to the 1-hour in a minute, but I was looking at this liquidity over here that I wanted to take out. Okay, so I took a long setup over here, trading towards this liquidity high and this kind of supply zone, which is more visible on the 1-hour. So going over to the 1-hour actually, again, what can we see? Like I told you, bullish inside discount prices, and then we tapped in towards this demand. Okay, so this demand I was expecting to push price up higher again, and as you can see, over here we had this liquidity high which I wanted to target. So quickly going over to the 15-minute, well, what did I want to target? I saw that we still had a open supply zone over here, as well as some more liquidity above these highs. So I was also looking to trade up higher in towards those liquidity highs. Now that we've done structure, premium versus discount, and supply and demand, now we can take a look at number 4, which is liquidity. So liquidity is a point where a lot of stop losses are laying, and yeah, we're going to see how we can react from certain points of liquidity, but we'll show that in the charts. So as you guys can see, we were bullish again, we are around discount prices, we are inside the month, and then liquidity, we see that we have liquidity under these lows, so in the near future we could trade towards this liquidity point. But for now, what happened is that we moved down lower, we moved up higher, and then we moved down lower again. So we took liquidity under these lows. So I was also expecting a little move up higher. Going over to the 4 hour, it's kind of the same. What happened over here? 1 second. This liquidity under this low is something that we took out over here. So I was also expecting a move up higher. Now also keep in mind is that we took some liquidity under these lows. So taking this liquidity, trading in this demand, could push price up higher, and then plus this liquidity gave me more confirmation that the move up higher could happen from here. So looking at the 1 hour too, well, again, this no over here, this was a liquidity which I was talking about. The no and yeses here on the chart is also going to be explained later in this section of the video. So we took some liquidity under the lows, and this liquidity for me was enough to trade in towards these liquidity highs. What we often want to see is if we take liquidity at the lows, we want to take liquidity at the highs. Now that we've done step 4, liquidity, now we can move on to step 5, which is almost the last step. This is order flow. So in order flow, we're looking for a chain of supply and demands, which is really strong, and we could flow with the orders, which I'm about to show you on the chart so you know what I mean. So over here, it's actually pretty clear that we have bullish order flow. So as you can see, we have demand zones which we are respecting at all times, and you see we are like trading from these demand zones up higher and higher and higher. Over here we have the most recent, like this whole sell before the buy, which was our demand. And then what can we see? Well, that we have this demand, and then we had this demand zone. So like pretty clear order flow, right? So the order flow on the daily was clearly bullish. So what could we possibly expect? Well, of course, from this demand we could trade up higher in line with that order flow. Going over to the 4 hour, we have exactly the same order flow. So as you can see over here, we have demand zones right like this, and demand zones like this. You can just see that we are respecting the lows, trading up higher from the demands, and also breaking the highs. So every time we have a high, we are breaking the highs time and time again. So what do we now expect? Well, to break the highs again. So over here, and let me clear this up real quick. So what did we see over here? Well, we also had bearish order flow. So we traded down lower, up higher, down lower. We created supply. From this supply, we trade down lower, created new supply, and now we're actually in a bearish order flow together with bullish order flow. So we were actually fighting in between this supply, actually this, and this demand. So either we will respect the supply and trade down lower, or we will respect the demand and trade up higher. So because the daily only had bullish order flow, I expect the bullish order flow to hold. And also where we were at the moment that I took the long setup was over here. So even though we were bearish, I still was thinking in my head, even though that we also have bearish order flow, we do have bullish order flow, and we could possibly trade in towards this liquidity, and from there we could decide if we respect the supply and trade down lower, or respect the demand and trade up higher. But I was almost certain of this move up to take out that liquidity, like I explained on the 15-minute. So this is our order flow. On the 1 hour, you can also see that we had this demand zone over here, and then what happened, if we look a bit closer, we created our own new demand zone. So now we had a demand zone which formed a new demand, which are two demand zones chained against each other. So we now have a flow of orders. So we have order flow, also bullish on the 1 hour. So actually bullish order flow on all time frames, and all the other confluences were there also. So literally an A+ setup over here. But let's now go over strong highs and lows. Strong highs and lows, number 6, is a pretty important step, which I'm about to show you in a second. So strong highs and lows, pretty important. If we come in towards our point of interest, which was the demand zone on the 1 hour, I'm about to show it on the chart, then we will look for a strong low to be created in order to trade up higher, so that we have a safe place where we could place our stop loss under. As you can see over here, we were inside our point of interest on the daily, inside this demand after grabbing liquidity. So on the 4 hour, we were in the same point of interest inside this demand whilst taking liquidity. And then on the 1 hour, we also were inside our point of interest inside this demand whilst taking liquidity as well. So we first needed a strong low to be created, and yeah, what is that? So basically a strong low is a low that is being formed after early buyers were getting swiped. So over here, what do we see? We trade down lower, we trade up higher, and then down lower. So a lot of people would say here that those early buyers over here who were buying were swiped over here. But actually that's not true, because there were no actual buyers. How do you know this? Well, we look at this demand zone, and once we tap in towards the demand, then buyers will step into the market. So these are all early buyers, and as you can see, we swiped them. So over here, these were not early buyers. Why? Because nobody is buying at this moment in time. Okay, they will only buy from the demand zone, and then we know those are the real early buyers. We swipe them, so we take their stop losses out under this low, and then we know that the real move in towards the upsides will happen. So then what do we see after? And let us use replay mode real quick. So after we swipe the low over here, we swipe this low, this no, we create another low. So once or when does this low becomes a yes or a strong low? Once we get a fractal break to the upside. If you don't know how to draw your fractal break, then make sure to watch my explanation video on that. But let's look further in this video. So we know that this was our fractal break and that this is our fractal high. So once we break the fractal high, we then created a yes. For now, it still stays a no. So let's wait and see what happens. And we do not get a fractal for now. We swipe the low first. So once we swipe the no again, we then made this our fractal high, which we also broke in the next candle. So now we have a fractal break. So what do we now have? We have a yes, so a strong low on a 1 hour, and we also have this as our demand zone, right? So what we then want to do after we got that fractal break, we know that we now have a strong low. So on our fractal, we know that this is a strong low where our stop loss could be placed, and we wanted to trade to this liquidity. So let's dive into the 50-minute to refine our entry a bit more. So on the 50-minute, it's pretty clear that we also had the supply open as well as the liquidity. So a lot of people, they would place their stop loss under this low. So what you do, you place your magnet under the low, but then you go into the settings and you move it 1 pip lower. So you will see we're now a little bit under this low, and this is just because of spread. So let's say that we just move like this, boom, we're still in the trade because we moved our stop loss 1 pip down lower. Really important that you do that because there will be a lot of cases where this will be helpful. So a lot of people would do this, which is great, and then they would target the supply, and then of course have a 3 risk to reward, right, like this. So a lot of people would have this, but what you will see in the next couple of minutes in this video is that we will not hit this supply zone, but will take out the liquidity, and that's the most important thing. Always target liquidity. If you have to take away one thing here from this video, take away this: always target liquidity instead of supply and demand zones, because most of the time we already move from liquidity instead of supply and demand. So if you would change our TP, it would be on this high over here, and then again we need a 1 to 3 risk to reward over here. So if you guys have any problems with risk management at all, choosing how much risk to reward you need to take and how much risk you need to take, then you can always book a call with me with the link down below. And yeah, I will explain my own risk management plan with you on a one-on-one call for 1 hour, and you will also get my document of my risk management plan if you're interested. Otherwise, let's go further with the video. So over here we have 3 risk to reward, and this would be our entry and our stop loss underneath the safe low, and we targeting the liquidity highs. And as you guys can see, it plays out beautifully. It was a bit scary there at the low, really close to our stop loss, but then we took TP over here. So pretty clean trade overall. We have checked everything out from the checklist as well as strong highs and lows. So yeah, pretty clean trade. For me it was almost an A+ setup. So yeah, that was it guys. Hope you liked the trade breakdown video, and if you guys would like to see more every Saturday, then just comment it down below, and see you guys in the next one. Bye.